we have a banking numbers, which by any standard is very substantial. You also told that thing. We have nearly 160 trillion deposit from the general public and institutions, and roughly 112 trillion advances, which is slightly more than the what you call 50% of our GDP. So in fact, at the time of nationalization, our bank advances was only 6% of the GDP. From 6%, we have come to more than 50%, which is a very, very substantial jump. And then if you divide the banking developments post-nationalization, we had the expansion phase till, say, the late 80s, rather to be more specific, till 85. And after that, we started consolidations, and comes 1991, we have liberalization. Many of the private banks started in the late 90s. And now we have then automation, and now we have entered into an area of digitizations. So these things, nothing is permanent in this world. The only thing that is permanent is the word change. So things are changing, society is changing, and we all, the banks and bankers also must change their attitudes. So now 30 years back, there was no mobile set in this country. And this, now we have smartphones, now we can connect with each other. And so that way one has to accept this thing. But the fact remains that we are a developing country, and we cannot transform ourselves to a developed country, to a modernized country overnight. It is already 75 years since our independence, and still there are certain gaps in the country, including in the banking area also. So we need to cover up those gaps. This will be also one of our topmost priorities. See, out of the 151,000 branches of all the banks, as you said, we have public sector banks, we have private banks, we have small finance bank, we have regional rural banks, the scheduled commercial banks. So we have roughly 151,000 branches all over the country. And so that comes to a per branch population of roughly 9,000, which was 65,000 at the time of nationalization. It has come down, substantially it has come down. But in case of the rural area, it is, we have 90 crores of our people who are still in villages. We have 6.5 lakhs villages in this country. So 90 crores as on date, if our India's population is 139 crores, 140 crores, 1.40 billion, whatever you call it, 90 crore people still live in villages. And all these villages they don't have the same ecosystem so far as infrastructure is concerned, so far as literacy is concerned, so far as electricity is concerned, so far as education is concerned. So for this 90 crore people, we have only 52,000 bank branches, 52,780 to be very specific, as in September. So whereas for the remaining 50 crores people, we have around 1 lakh bank branches. So there is a little, what you call, isko Hindi mein kahenge bidambana hai. So we have more branches in the semi-urban, urban, metro areas than in the villages, whereas our majority of the population, still 65%, 5% of the population still live in villages. So this is one we need to, and per every, when you consider one bank branch, it caters to the need of, at the national level, 12 villages even now. Whereas in some of the states, in the eastern states, northeastern states, some 20 villages are covered by one bank branch. Of course, now we have the postal payment banks, we have small finance bank, and we have the what we call the banking correspondents. But to have a bank branch is, it's a kind of, the comfort the people have. They find somebody there of their own who speaks their languages, who understands their language. They find a leader, they find an advisor in the bank manager, in the bank officer, in the bank employee. So we need to expand in the rural areas. I'm not saying only public sector banks, all public sector banks and private sector banks, RRBs, all the new players also, we must expand our base. This is one sector which is still under-penetrated, I will say. So we need to expand, because if India is to grow, our villages must develop.
Your voice is breaking, sir.
We should reach out to this particular area. And then it comes to, this is not only one area, this is not the only area. Then we see things are changing. So digitization is something which has come to stay, and digitization must happen. we have one of the best payment platforms in the world, I will say. Gone are those days of going for a bank draft or going for a postal orders or going for rushing to the branch for transfer of the amount. So now it is digital world. So digitization should happening. It should happen in a big way. These three things, Aadhaar, what you call the JAM, your Jan Dhan, Aadhaar and mobile. These three things are doing wonders. But my only focus will be we have to strike a balance.
Switch off your video.
We have to strike a balance between what you call the digitizations, balance between our expansion in rural area, our expansion in the area which we have not reached so far physically. At the same time, bringing those majority of the people to the digitization fold so that they get the benefits of the first expeditiously they get a loan, expeditiously they get linked, expeditiously they can transfer their amount. So these two things I will suggest it should go together. And the banks have a huge database now. Any bank, you name any private bank or public sector bank. Now our FinTech companies, friends, they have the knowledge, they have the technical acumen. So if we come together and go for a kind of collaboration, they focus on coming out with a customized product, and we focus on serving the people. I mean, the banks focus on serving the people with the help of this customized, because they don't have the data, they don't have the reach to the countrysides. So we need to have a collaboration. There should not be any competition. We are partners. We should be partners, and we have some kind of symbiotic relations we must develop with each other. It is a win-win situation. You understand our need, and we need your help. And then another problem with the banking sector now is that the kind of bonding we had of the employees with the institutions when we joined the bank. Now slowly this bonding is getting affected for various reasons. Things are we are a transformational, what you call the transitional society. So now people they keep changing their organization, keep changing their banks. And I'm getting here scale 1. Suppose somebody makes him a scale 2, he goes there. And notwithstanding the fact that the promotional avenues have improved in all the banks till the middle management. So, but the kind of bonding that we used to have earlier among us and with the institutions, with the society, there is some dilution, I will say. So this is also a cause for concern. But again, keeping in view the 5 trillion economy target that we have for 2025, our banks we have to work and deliver in a more professional way, taking into considerations the country's the ecosystem and the need to be more technical, at the same time taking our people along and opening up our minds, accepting the change and being a change agent ourselves, and taking the things forward, making it an inclusive society, bringing all sectors of the society together, and let the benefits of banking reach out to every person in this country. This is what I wanted to say in brief. And in case there is any kind of questions and all, subsequently, I will try to.
Okay. Thank you, Mishra sir. I think you have very well defined the traditional versus digital banking. And I can see the passion which you have actually being a banker, 36 years banking. I think it come from your core of heart actually. Thank you very much, sir. I'll come back to you. I think the 2-3 things which you have touched upon this, the bank branch in rural areas. So we will discuss whether the branches are needed or the technology will help to reach there. Although your point is valid that some kind of touch and feel is always helpful. Then the partnership which you have given that now the time has come to partner with the FinTech or other players, and the bonding of employees with the banks or with the institution. This is an aspect also which need to be discussed. So we'll take these questions or the discussion. Now I would like to come upon to Mr. Sachinder Nath, who is the executive chairman and the managing director of UGrow Capital Limited. Mr. Nath is a corporate leader actually, and he basically having more than 3 decades of experience in the the financial services sector. He had built up organizations from scratch to the giants. And now he's building up this Ugro Capital Limited, which he bought in, he basically started this in 2018. And predominantly this company is into the MSME lending. So, Mr. Nath, as you know that India is MSME, we are a very large number MSME country where more than 6 crore MSMEs are there. We are exporting from MSME, which is a good number of percentage. We have large number of employee or large number of employment which we are providing. So MSME is the backbone of the industry or a country, rather economy, basically, I'll say. So in the entire GDP, the MSME is contributing a lot. And so because your company is, I think, predominantly is focusing on the MSME lending. So we would like to understand from you from the point of view that in next 4 or 5 years, what will be the change and how it can be like that, the consumer lending actually, because MSME is still the government has started this 59-minute loan and all these things, but we have not seen the headway. So from your point of view, what change you see in next 4 or 5 years from the MSME lending point of view? And the one more point which Mishra ji has covered up, this is the partnership, because partnership is now a term which is, I think everywhere is discussing. So if you can throw light on this, that'd be great. So thank you very much.
Thank you, Ashish ji. You are absolutely right. Our last 3-4 years, we have been working very hard to build India's largest, most scalable MSME financing platform. You know, we started this journey by raising a significant amount of capital. Unfortunately, you know, immediately post our capital raise, we had ILFS, we have DHFL, then we have pandemic. But we had the conviction that for an economy like India, there has to be the problem of credit for MSME has to be solved. And it has to be solved in a very different manner, the way it has been done traditionally. I would first, talk about in terms of your question of what is the big change which we are seeing and which is happening. We define it that India's MSME financing is moving from collateral to cash flow, and that in last 2 years have accelerated at a very big force. Let me, try painting a picture to you. Think of 5 years back, a PNB or an SBI or an NBFC going to an SME borrower and ask him 3 questions. Sir, what is your revenue? The SME would say, my revenue is all in Kacha. You have to assess it. Then you ask second question, what is your expense and why your expense is too much, why your business has a very suboptimal profitability. The borrower would say that because most of my expenses are not related to the business. And once you don't have visibility of the revenue, once you don't have visibility on the expenses, the lender has no choice but ask for a collateral. Now, and that has led to setting of a trend wherein we said, okay, SME financing is not, you can't assess the cash flow of an SME borrower, so assess him on the basis of what collateral he offers. But the capacity of the collateral in India is evaporating. There was a point in time that when the most of the collateral which was offered in form of real estate used to double in price in 5 years time, which means that if you have borrowed a 50 lakh rupees against a 1 crore rupees of collateral, in next 5 years, the collateral value itself would go to 2 crore and you can borrow 1 crore rupees. Now, having that collateral value remaining flat, business growing, your capacity of borrowing has got constrained. This has changed what we call because of the tripod of the data. You would be amazed to know that today we disburse almost 300 crores of loan per month. We don't ask a single balance sheet information, income tax return, or anything with respect to historical financial information. And we use what we call this data tripod of GST, banking, and bureau. The beauty, and that's why I keep saying that India's MSME lending in next 24 months would reach to the level of consumer financing. Today, if you walk in a Chroma store and if you want to buy a fridge, TV, AC, you can get a financing done in half an hour or 45 minutes because you give your mobile number, your bureau record get fetched, most of the other data comes onto the system of the lender and your credit limit gets set up automatically. But when an MSME goes and try financing a order, which is a purchase order, it can take anything from 15 days to 3 months time. That is changing because today lenders have capacity, what we call the OCEN, the India Stack 2.0 or the Open Credit Trail Network, that we have today the capacity to pull the GST data on flight, which gives you 400 plus parameter, which gives you the turnover data, counterparty data, and multiple other, use cases of the GST data, which you can profile the revenue of the SME. When you pull the banking and once the account aggregation comes in full force, you can analyze the eligibility of the customer literally within minutes, wherein you can look at his average banking balance, you can look at his actual cash flow, you can segregate real expenses versus not business related expenses. And Bureau gives you the what we call the behavioral analysis. So today, not only we make every customer eligible on the basis of this data maturity which is happening, and that would change the dissemination of credit in next 2 years very, very dramatically. So that's one part of it, and that's why the India's lending for MSME would move from collateral to cash flow, and it would unleash the size of the MSME credit market, and it would, because India can't survive. And today the data which you quoted for number of registered SME is prior to the retail trade and wholesale trade being classified as MSME. Actually, if you take that also as an MSME or a small business in India, the total number of MSME is actually double than what is registered. And every small shop, a tea vendor, or in tier 2, tier 3 town is actually a small business and now qualified as a priority sector. Second, over a period of time, what we face that in the micro segment, which is micro MSME, the power of the data is still very poor. And that's why we have to still continue to build our physical infrastructure. But my belief is that now it is time the lending institutions which have the agility, have to have conviction and use the data, would be able to demonstrate a very high credit quality and very high credit dissemination. Second, your point in terms of the partnership, which Mr. Mishra also said. See, we have to remember India's capital is locked in the hands of the bank. Because whenever there is a bank name associated with any entity, there is a factor of trust. We like to put our money only in a bank because we believe that banks are not to fail. Fortunately, governments and regulators in India, to a large extent, have made sure that banks, no depositors' money is ever sacrificed to a large extent, I would say, except few recent cases wherein the money is delayed now. So the custodial of the capital or the money would remain in the hands of the bank. There is no doubt in my mind that the bank's reach is far superior than any of us. Today, UGRO is a 56 branch location. SBI has 22,000 branches in the country. Still, both SBI, Bank of Baroda and IDBI has partnered us on co-lending, not because our reach. So I think so this, a lot of people talk about NBFC and their last mile reach. But actually the last mile reach of the bank is far superior. It is about the orientation of how do you underwrite the customer. Because in the banks, traditionally, they have looked at underwriting the customer in a very different way, which I call in the conventional methodology of looking every customer, not to be able to differentiate between a mid-corporate versus a small business customer, look at everyone on the basis of a balance sheet driven approach. Banks are unable to provide the same credit, but this whole collaboration. So Ashish, you would not believe this, that today, State Bank of India, Bank of Baroda and IDBI, all three large lending institutions have adopted our data-driven underwriting 100% basis. 2 years back, when I first started having conversations with some of these large institutions, if I would have really not believed that an SBI would sanction a loan without looking the balance sheet of a customer or his file tax return, but would say yes on the basis of only looking GST and banking data. But that change is happening, and banks are relying on our agility, deep focus, and being able to reach that customer and underwrite and collect from that customer in a differentiated way. So the power of the capital which is in the hands of the bank and the agility of the alternative lenders, this marriage would transform the lending industry, is my view, especially for MSME as a segment of the market.
Great. Thank you, Sachinji. I think You have covered very well this collateral to cash flow. I think this is needed because many times when we are talking to MSME entrepreneur, he is saying about sir मेरे को बैंक में जाना है तो पहले collateral बना लेता हूँ उसके बाद मैं बैंक में जाऊँगा. So this is the thought process behind the all MSME segment. This is a great shift from collateral to cash flow. I think it has started and it will go further also. And the another is the way of underwriting of the customers. So as you have given the example that the banks are accepting 100% of the NBFC underwriting model, which shows that the banks and NBFC both can do wonder in the MSME lending, where the MSME which were untouched, now they can be in a position to get the money at the faster pace, and maybe the cost also can be reduced.
Absolutely.
So these things definitely will help.
Absolutely. In fact, just an example, Ashish, you have been involved with us with some of our partnership and have, Resurgent has been supporting us as well. Today, for a prime customer of Pratham, Ugro can lend between 8.5% to 9.5%. As a NBFC, this is below our cost of capital. But we have been able to bring down the cost, the lending rate for a prime MSME customer at that base, because the power of the capital and the cost of capital advantage which Bank of Baroda bring to us, and that we have been able to transfer to our customers at the ground.
So this is the beauty of partnership, actually. You see, so these kind of partnerships, I think, will change the entire outlook. And as I have seen that on many forums, you are always advocating that the MSME lending should be like a consumer lending. So I hope it will be reality by 2025. So because today's topic is the banking in 2025. So thank you, Sachin ji. Thank you very much for your nice deliberation. Now we have Rajiv Kumar Agrawal ji, who is the AGM of State Bank of India and member of faculty of SBI CRM. Rajiv ji is having very great experience in the various departments, and he has very good understanding about the various segment of banking also. Regarding financial analysis, this cash flow, and the post-sanction credit process and etc. And he is a faculty also, so I think nobody can better than faculty on the topic like the future of banking, actually. So Rajiv ji, first of all, thank you very much for joining with us. And you see that SBI is a very large bank, largest bank in the country, actually, and you have reach also everywhere. So, like we were discussing in the practice session, that this collaboration, which is a topic I think we need to discuss further. As Sachin ji has also told that the SBI has accepted the 100% underwriting norms of the NBFC, and we have seen the success of also. So I think we would like to understand from you, how do you see the banking in 2025 from your point of view, and this collaboration? Through that, you see that such kind of collaborations in future also, or this is just an experience which the bank is gaining? Just over to you, sir.
Yeah, thank you, Ashish ji, and thank you all the distinguished speakers. So, as you asked Ashish ji about the future of banking and the collaboration and all those things, so I would like to say that this collaboration is not the new thing, or though the focus on collaborations with the NBFCs, especially the co-lending part, has been started recently. But if we go back in last 4, 5, 10 years, we have already started collaborating with the in a different way. Like for inventory financing, we have started vendor financing, dealer financing, in collaboration with the industry majors. We have taken the data from the industry majors and financing the dealers, vendors, all those things, EDFS, EBFS, with the use of technology and all those things. So it started way back, 8, 10 years ago, and the quite successful model is there, dealer financing, vendor financing. Even trades are there. Trade receivable financing platform is there, where the for the SME, they can discount their receivables, they can get the money whenever they need. Even startup financing, we are doing startup financing. Even with the use of this technology, in the case of MSMEs, the major problem with the MSMEs is the renewal or submission of papers for the renewal of their loans or credit facilities. So in our bank, we have already started the automatic renewal exercise. on the basis of whatever information, data available in the system technologically or using the artificial intelligence, machine learning, we have already started. As far as collaboration is concerned, so recently, not recently means quite recent, we have collaborated with the NBFCs. Why? Because the primary focus of this co-lending or collaboration is to improve the flow of credit to the unserved or undeserved areas of the economy and make available funds to them with the help of the NBFC. Because NBFC has the reach at the ground level. We have the funds, low cost funds. So RBI has permitted banks to co-lend with the by making the collaboration with all the registered NBFCs. The reach of NBFCs among the local population, it helps them to assess their financial needs and increasing the bank's loan portfolio. NBFC also provides this support in the post-sanction follow-up and recovery and all those things. So I mean to say this partnership or partnering with the fintechs or NBFCs, this has already started. But there is a need, there is an urgent need to increase all those things to reach the real MSME sector and to grow for the growth of the MSME sector. As far as the future of lending you are asked about in 2025, now we cannot believe or we cannot grow by using the traditional methods of lending because they have their own limitations. Now we are 75 years after independence. We have well matured banking industry. Even the businesses are matured. They understand the financial issues and all those things. So business models are also changing day by day. Traditional products like cash credit, term loan, they are now out of the market almost. And nobody wants to visit the branches. They all want to use the technological platforms and all those things. Technology is entering in each and every field. Even if we see after this pandemic, the education system, the entire education system, it's now on the technology platform. No, even private sector, most of the private sector, they are from work from home. So technology is the future. So use of this artificial intelligence, machine learning, this is the must. And in our bank, in State Bank, we have already started product by using the analytics, and we have set up an analytical department at our head office. We are already providing consumer loans, pre-approved personal loans, pre-approved business loans, merchant loans. Though the quantum is lower, and the upper circuit is also lower because it's all in the initial phase, in the nascent stage. But in future, obviously, we cannot go as Sachendra sir has also said that balance sheet based funding, that is not the future. In future, we have to go by the use of the technology. Nowadays, so many data is available on the various platforms, whether it's a GST or whether it's income tax or so many information of the borrowers. The need is that all this data, all this information belongs to the borrowers or the MSME sector should be available to the lenders at one platform on a single click without the intervention of the borrower. We should not dependent on the borrower. We should get the information directly. Fintechs, as far as we are talking about the fintech companies, they are growing and catering the need of to some extent to the MSME consumers and all. So we have to further collaborate with this growing fintech companies or more NBFCs and develop the customized products, the structured products, not the traditional products, to take care of the need of the SME financing. So the future of lending by 2025 or say in the next 4 or 5 years will be the technology-based, the collaborations, the partnerships, and with this all this fintech companies and NBFC. So this what I would like to say on this topic.
Thank you, sir, Rajiv sir. Thank you, Rajiv ji. I think you have very well told to us that this partnership is not a new thing for the banking actually, although it was there where the anchor-based partnerships were there, inventory funding or dealer financing and all the things. Now this partnership is between the two players of the same industry actually, so which is a new thing. And you have told that renewal of the credit facility is again a challenge. So I hope that we have a lot of fintech companies, though they must be working on the solution for that. and the use of additional method of lending. Definitely, over the years, the new methods of will come for lending also. And like Sachin ji has told that this completely underwriting of the NBFC is accepting by the bank. So there may be other things also which will come, which are creating some hurdle. So this will change the entire banking over the years. Thank you, Rajiv ji. So friends, we have Sri Anand Kumar ji, who is the CEO and founder of Fins Financial Analytics. Anand ji, the Chief Executive Officer of this company, and he has been responsible for ensuring that Fins flagship products like Angur, Accure or Assure are developed using the latest technology and market trend. So he is the person who understands or who is practicing technology since last many years. And I believe that he will be interested to discuss on the technology part and the digital lending. And so Anandji, first of all, thank you very much for joining with us. And you know that digital lending, by reading some report where it has been given that by 2023 there will be the digital lending will reach to $1 trillion in India. So it's a huge opportunity for the all stakeholders, the entire ecosystem, not only banks, not only NBFC, but even the FinTech players will get the advantage of it. So a lot of neo banks are there which are already working. So we would like to understand from you about the digital future of digital lending. What do you think that this whatever has happened, it is sufficient, or there is a requirement to do more on that side? And the neo banks, will they make the disruption in the entire ecosystem? Because as we were talking to Mishra ji has told that in rural areas, touch and feel is important. So the neo banks are not having even a single branch. So we need to understand from you all these aspects. If you can highlight, that will be great. Over to you, Anand ji.
Yeah, I think Mr. made a great. Thanks for the opportunity. So as you said, there are 90 crore still unbanked customers, and the fact that the banks didn't reach there because there were low margins there, less coverage, less people to cover, and like so here. Margins are more important, and that's where FinTech with their technological disruptions can help and really increase the reach for the banks there. Apart from there, not to just the coverage, the other parts of the strategy fall into play. The previous respondent already hinted about that. So there are points like, okay, we already working on data analytics, machine learning, but technology as a paradigm is supposed to change, right? So what is the future ahead? So on a strategy part, the banks in collaboration with FinTechs would have to have an agile governance model, which would have people from business and technology who could like really handle disruptions coming from three levels. One is technology, because what competitors are doing, I need to catch up. How the business functionally changing. So if there is a new feature somebody is doing, how do I bring it at a lesser cost? Third, disruptions. Who would know better than people here? From demonetization to GST, each one of had its own options. And we're to say announced, and now we see that people fearing even using their credit card, which they boasted of. So now we are losing consumers on that, and we rather than entire generation shifting to products which are like contactless, so wallet, buy now, pay later kind of products. So as I said, the governance is required, and a lot of partnership is required. On an execution phase, like if I really talk about technology, right? For example, if I'm a lender, okay, there are three phases in lending broadly. How do I acquire customer? How do I manage them? And how, if their loan gets bad, how do I like really recover? So which is collection. On a broad level, Mr. Nath like really talked about Ugro Capital on like getting non-traditional sources of data being accepted as a traditional source. So this is going to mature, and you will have, like, apart from bureau, traditional data, data which would like really help get better decision. You will get new set of providers. So it would help the banks to like create a structure where they can like really plug into these kind of providers and do things at a lesser cost. We talk about NP a lot, but there are a huge set of customers which we reject because we apply traditional sources of underwriting. So we need to like really look at data which is untapped, look at his payment history, look at his wallet payment history. So some of those things would like really give you better insight on the customer, which you can onboard. So, and then you can like really in a recursive process acquire more customer. We were talking about co-lending here. So co-lending, I'm just taking an example from one of our implementation. So we built a marketplace. So for our customer, which had a corpus like 100 crores, they could lend like much more beyond they were capable of. So it was like 4 times there. So we built a marketplace. So the marketplace gave them a capability to onboard rest of the lenders on their platform. So suppose if they get a bigger party, SME. So now if I am an MSME and I need like 400 crores, somebody who has 100 crores of corpus cannot give me. But if I, as a provider, give somebody a marketplace where he can like announce that, look, I need that much amount, then people can collaborate and give them. And then through my platform, I can like really pay, accrue their profit, accrue the interest back to the lender. So those kind of collaboration is required. So, and as Mr. Nath pointed out, the things would be seamless because right now, the way you are doing it in consumer loans, similar thing would happen because of a lot of digitization there. And as I said, you would have more sources for onboarding even lenders and not only customers. So in this example, we did have an API platform. Okay, so the API platform not only like really increase the customer base, but also increase the customer journey. So I can like onboard a customer through WhatsApp, because if I have an API journey, so then you have to just call an API to an API, right? So you have multiple people calling through various channels. So people can join through WhatsApp, people can join through a third-party customer, people can join through our own platform. So that way the customer can like really progress. Again, I am emphasizing disruptions more here, because disruptions are going to be key. There are many spoilers to our dream for a 5 trillion economy. So we, even bank and fintechs, should like be very about what kind of disruption can happen, and they should budget time and resources accordingly. And that's how we could like really continue our path for a bigger and successful economy. Thank you.
Thank you, Anandji. Thank you very much. You have very well covered about the technology part. What you are saying, that you are creating a marketplace where the banks and NBFC or the players are not worried about the customers. They should onboard the lender and the customer is available readily. So good, I think some innovative solutions are in process, and hopefully this will help to grow the entire banking. And these experiences will definitely increase the overall lending in the ecosystem. As I told in my initial remarks, that this is a concern area, that in the last 4 years, the average the credit growth is something around less than 4%, which is a very big concern for the country actually, because we want to achieve this much of a number, this 5 trillion or 10 trillion economy by 2030. We need to increase the credit to GDP ratio, which can happen only through digital lending. and by adopting the new means. So now I'll come back again to to Mishraji. Mishraji, because you are the helm of affair in the IBA. So there is a very pertinent question which is related to the government is now taking a call to reduce the number of banks, privatization of the PSU banks. So how do you see from the banking point of view, because you are dealing with all these banks sitting in IBA? So one side, the government is giving new licenses like a small bank license, or they are making this foreign bank as a subsidiary bank in India. On the other side, the government is reducing the number of banks in the PSU category for privatizing the bank. So how do you see, or what are your views on that? So over to you, sir.
See, basically, when the government is a owner of public sector banks, for operational regions and to have better control, it is always the amalgamation was proposed, and the amalgamation experiment, anything new that to stabilize it takes little time. So I think all the amalgamated entities, I think around 5 or so, they now have a pan-India kind of setup. So you have a competition among the equals. So that way it is good. But then but the process is there is a transition. It may take a couple of years time for the things to stabilize, the technology integration, employee integration, HR integration. Some of the branches have to be shifted or merged. So these things are, but any good thing, any big thing you want to have, there is little cost associated with that. So that is one part. As regards the private sector banks, you are saying, see, the private sector banks have, there is a phenomenal growth in private sector banking in India post-liberalization. There's nothing wrong in that, because we are a mixed economy where both the public sector and private sector have to play a very, very active role towards nation building. So the last 30 years after liberalization in 91, the private sector bank started, they had only 10% of the ecosystem in the banking, what you call Indian banking. So now at the end of, after 30 years, now they have reached up to 40%. So this 40% increase, 30% increase over a period of 30 years, by any standard, it is quite substantial. They are doing a good business. And the private bankers coming has helped public sector bank in one way, is that technology, the ambience, personalized and customized products, these things they learn from the private sector banks. There is no harm. One should not hesitate to learn things. As our friend was also telling, MSME, who is has this MSME company. There is even a small company with limited number of offices, but they have their knowledge is something it should be always ready to accept and learn. Learning is always a continuous process. So the private sector banks has grown really, and a couple of banks, maybe the small banks will be, I think government plans to privatize, will not make much difference. Public sector banks still have 60% of the banking share, but only thing I'll suggest, I will submit, is that they should also play the same kind of role. It is both the profit maximization and your social responsibilities, both should go together. We are a developing country. We are a country in transition. We are not US. We are not UK. So there are 3 examples I will say in the recent past, what has happened during the Jan Dhan time. The data, the government of India's data also says that 97% of the accounts were opened by the public sector banks. Then it comes to demonetization. It is the public sector banks who were there to exchange the notes in a big way from the general what you call the layman all over the country. In the pandemic time, now you have ECGCS also, then that is happening. You find the more proactive role by the public sector banks. See, if you are going to have the fruit of the market, you are trying to enter into the market in a big way, take the share from public sector banks. There is no harm. There should be always competition. But at the same time, we should also contribute towards the nation building in as much as we are a diverse society. We are a diverse society. So we need to have to focus for those people who are little neglected, who are in the countryside, who need little more help. So if that is done, there is nothing wrong in the private sector banks coming on also in a big way. There is no harm.
Great, sir. So that's what my question actually, sir. Because private sector banks are driven by their stakeholders. There will always be motive the profitability and all. But the government is reducing the public sector bank, and the motive of the government is basically to basically these social schemes or the schemes in the interest of the public. So when the number of banks will reduce and this will more private banks will be there, whether the kind of reforms or these kind of social schemes will be possible for the government to
No,
reach.
I think it is too early, because in the last we had our annual general meeting in Mumbai, which was our 75th general meeting, and where the Honorable Finance Minister also came there. And she made an announcement there that India needs not one State Bank of India, but you need at least 5 State Bank of Indias. That means State Bank of India size. So now, so because the fact remains that there is it's kind of, it is only the public sector banks who will reach out to the common man. Let us be very frank on this thing. हम जितने मर्जी भी इसकी बात कर लें, प्राइवेट बैंक आगे आएंगे. You need any private houses, it is only Tata. They have a real sense in the CSR responsibility. They build schools, they build roads, they build colleges, they build hospitals. Not all private sector giants, but then we have to go together. They no harm. So public sector banks will remain in this country. They will continue to contribute their existence. I don't think in the near future there is any threat to their kind of existence. But yes, because they are increasingly associated with the what you call the general development of society, and they need to be professional. The only social banking will not do. We need to be professional. We need to earn. That's why I was talking about the collaborations. We need to read the lines on the wall, because digitization and all, you can't go away because I'm serving the rural area, so I should not go digital. No, that will not do. We need to transform ourselves. Public sector banks need to transform themselves. You have to be competitive. You do automation, digitalizations, everything. At the same time, where the focus is required, you need to focus those sections of the society also. And my request will be same for the private sector.
Very good message, sir. Public sector banks have to transform themselves and to collaborate, to grow and to serve the society at large. Actually. Thank you very much. So, Mr. Nath, I think one thing which we have discussed, we touched upon this co-lending actually, which is under experimental stage actually we see, and your company, the leader, leading in that space. So we would like to understand from you if you want to give any because you have now experiment or you have already practicing this thing. So any suggestions or anything which you think that for the growth of or for the success of this co-lending, because DFS, RBI and the banks all are very much willing. We are seeing, because we are meeting with every bank and we are seeing their response. So everybody wants that this would be successful. So from your point of view, whatever you have experienced till now, it's really whatever the model is there, it is okay, or you need some more things or more modifications that, or and how do you see that in 2025? What will be, because as of today, the majority of the borrowing of the NBFCs from banks actually, you see. So will this model be a game changer for the NBFCs in terms of their the resources requirements? Over to you.
Yeah. No, thanks, Ashish ji. I will just quickly want to come on this privatization of public sector bank. I'll just take 1 minute on that.
Okay.
So first
Okay, please.
we have to remember that in last 5 years, taxpayers roughly around 75,000 odd crore has gone into public sector bank. And it is not that government really want to lose the control over public sector bank, because that works towards their multiple agenda, but they have no choice because they have no capacity to continue pouring in so much of capital. And that's why they are getting privatized. I agree with Mr. Mishra that the social cause or the social banking aspect in India has only been done by the public sector bank. But I want to give you one data point. So on one side, when we are consolidating public sector bank, from 35 we have gone to 12 and now 5. Unless look at this, in the United States of America, there are 4,536 commercial banks. Versus in a country like India, we have 32 commercial banks. So with the reduction in the public sector bank, acceleration of grassroots banking by massive number of licenses which are of a specified category, if that is not done, the credit penetration by the hands of few private sector banks would never get achieved. Today, Ashish, today a new age NBFC like us, which is focusing only on MSME segment, large portion of our business is supported only by public sector bank, whether it is term financing or whether it is co-lending, because private sector banks are in their own sweet spot and they have no reason to come and support. When we will mature, today we will cross 3,500 crore end of this year. When we will be 5, 7, 10,000 crore, every bank would come to us. But the initial support for any financial institution and to that corporate only come from public sector banks. So the penetration of the banking has to be increased multiple fold in our country. With respect to the co-lending, as I said, that the trend is that the banks are tired, whether it's private or public sector banks, giving money to NBFC and that money going elsewhere. Because they give money to NBFC for a certain end use purpose, but the money leaves the NBFC's hand and goes somewhere else, and ultimately the loss happens in the balance sheet of the bank. And that's why the trend is banks are willing to support NBFC for their core capability, which is origination, underwriting, and collection, but want to take the end exposure to the ultimate client, not on the NBFC. And that's why the model of co-lending has been propagated. My advice to anyone who would like to do co-lending is to have serious patience and perseverance, because we are in a phase of learning transition. It is not easy for a size of a large public or even a private sector bank to adopt to the practice of an NBFC, and that transition would happen over a period of time. Remember this, the first securitization transaction in India happened in 1991. When the Shriram Transport Finance sold first portfolio through CRISIL, and it took almost 2 decades for securitization industry to mature, and now it has become on kind of an on tap. Co-lending acceleration is actually much faster if you put it in that context. Today, in last 2 years, almost every bank want to start co-lending. Some of them are actually far ahead in terms of their understanding. Some are at an initial stage, but they are adopting. But if this model settles in, the capital requirement of the NBFC, both on the equity and debt side, would come down dramatically. The margins for the NBFC would improve, and by virtue of that, they will be able to focus and penetrate further what they have been constrained in last 3 to 4 years, is my firm belief. We have been working very, very hard. Just to give a context for both SBI and Bank of Baroda, it has taken us almost 1.5 years to go live. But I still feel that that's very short period of time given their size, because had the co-lending not been there, 1,000 crore of co-lending program with Bank of Baroda, 1,000 crore term lending on 1,000 crore capitalized NBFC is impossible, but 1,000 crore of co-lending is possible. And that's the beauty of the co-lending as a model.
Great. I think this will be a game changer, although you are not giving in public the number, but your tone is they're telling us that the 1,000 crore NBFC can get 1,000 crore of co-lending line, then definitely the purpose is solved actually. So banks like SBI and Bank of Baroda and other banks are coming forward. So it's a game changer for NBFC.
Sachinandan, I'll take I'll take a minute only. I think well explained, but then see then you said the number of private banks in US. I think it is too early. I mean, we are not even in the nascent stage also to compare ourselves with the US so far as the number of banks is concerned. You can't afford to have so many banks here. We have regulatory issues. You see what happened to the Punjab Maharashtra Bank, what happened to the Yes Bank with so much of bank. So number doesn't matter. We should have the commitment with the public sector bank or private sector bank. If you want to serve the society, I think we can join hands with you. The NBFCs are there. Number doesn't make much difference. But yes, number of banks doesn't make much difference, but the number of branches do make difference. So I think we should take a balanced stand. We don't need so many banks in this country. Okay.
Thank you, sir. Thank you, Mr. Raji, for your.
If you permit, Ashish, I have to leave for the ministries. There is a meeting. If you permit.
No issue, sir. No issue, sir. So I would like to thank you for joining with us, sir. And we are elated with your deliberation, sir. Thank you very much.
Thank you.
So, friends, now I would like to invite again Rajiv, sir. Rajiv, sir, we had a good discussion with you about the collaboration and all. one new thing has come in it's a new baby in the entire ecosystem, this bad bank, basically this ARC, so-called government ARC kind of. And you see that NPA numbers are there, and the recovery rate is also now is good. And if we see the past, the ARC could not do much actually. If you see, they have faced a lot of challenges, capital challenges are there. The resolution could not happen and all. So what do you see? Because we are talking the banking opportunity by 2025. So there is still the 4 years are there. This can this bad bank or this new ARC can make the headway in the entire ecosystem to resolve the NPA and get the success for the banking in terms of recovery, better recovery. Over to you, sir.
Yes, sir. Thank you, Ashish. So, as you have asked about the success of this coming bad bank or ARC system or recovery, so my submission or my point is, unless otherwise there is a improvement, tremendous improvement in the judiciary system, I don't think nothing much will happen in future also. These ARC, whether it's a bad bank, coming bad bank or existing ARCs, they are already there. And our bank or public sector banks, even private banks, they have earlier also given so many accounts to the ARC. There is not much difference in the recovery by the ARC or by the banks. The only thing the ARCs or this coming bad bank, they will focus only on the NPA part or the stress assets, whereas bank has to do business also. But the basic problem is the judiciary system. We already have SURFACE, we have BRT, we are coming with the IBC in 2016, but we all know what will happen to all these recovery measures or the whatever efforts government has started. Even in SURFACE, there are so many powers given to the lenders, but can we really exercise those powers? There are so many loopholes in the system, loopholes in the legal system or judiciary. Same thing happens with the even IBC, though the results of IBC is far better than any other, SURFACE or DRT, but still there are so many legal complications, big cases, years over years, the cases are going on, the coverage not happening. So the coming bad bank, maybe now what will be the model and what will be the modalities and how much power they will be given, it's very early to comment about the success or any improvement in the recovery part or the stress asset management for the banks. It's too early, sir. But my submission is there should be a support from the judiciary also or the legal system also.
Thank you, sir. Thank you, Rajiv. So, Anandji, I think you're rightly told that it's too early to say anything, but let's see, let's hope for the good. Anandji, I think you were discussing earlier also this integration with various platforms. So, you see now, buy now, pay later. There are many new terms are coming in the discussion. So what is your take on that? Basically, this integration with various platforms by the banks and getting the success out of that.
Yes. So how does it financially? How does it finance? Most of these platforms currently operate on banking as a software platforms. So whether it's to do with a particular customer journey, customer verification,
Sir, your voice is breaking actually. For me, I think I don't know whether others are listening. आनंद जी आपकी आवाज ब्रेक हो रही है थोड़ा सा.
I think I was pausing a bit. Okay. Is it better now?
Yeah, no.
Is it better now?
Yeah.
Hello.
Yeah, it is better now, sir.
Yeah.
Anand ji, it is better.
So, So it gives you a costing. It gives you a better thing. So.
I think you left. So, okay. So, friends, already I think we have Anand, you have Arij, are you there? Okay. So friends, I think we have already overshot Arij, your voice is not, I think you are muted actually. You are on mute, sir.
No, unmuted myself. I think me meeting for that. Can you hear me?
No, sir, we are not in a position to hear you.
Okay, that's okay. That's okay. Okay, we'll pause it here.
Okay, no, thank you, sir. So, friends, I think we have already overstood our time. Keeping in mind the interest of on the topic, it's a good discussion. But what I feel actually, although the audience is the right, basically they can tell us that whether we have justified whatever we have discussed. So we have discussed many things, and the topic of this today the webinar is very relevant to discuss on that the various things, digital lending, collaboration, and the other areas which are I think have been discussed in detail, and I think every panelist or key speaker has given us their thought on that what they think about the collaboration, what they think about the co-lending, what they think about the digital lending, and we have come out with a positive outcome that the rural reach is required. So whether it's a through physical mode or through a digital mode, but definitely we need to have a rural reach because our largest population is still living in the rural area, and the partnership. This is the second aspect of this today's outcome, that the partnership is must. Whether it's a partnership between NBFC to bank, whether it's a partnership with the FinTech, the NBFC and bank, or whether it's a partnership with the other players. But without partnership, it's very difficult to reach the number of 5 trillion economy or maybe $10 trillion economy by 2030. And this and the another this thing, collateral to cash flow. I think this is a very good suggestion which has come, that the only collaterals will not be the criteria for any lending. The cash flow should be considered also, and the underwriting methodologies which are there should be followed basically. But the new ways of underwriting are also important to understand, because the success which NBFCs have seen by way of underwriting in their own way, and the banks are now following it. So this is another area which will help to grow the bank, and this is a big opportunity. Banks will start understanding the underwriting method of the NBFC. This number, whatever the growth which we were talking, the credit growth is 4%. It can be doubled. This is my thought, because there is a huge demand which is untapped. But the only problem is that the banks are not in a position to lend the borrowers, but NBFCs are equipped to lend what they need, the raw material or the resources in a free hand, so that they can reach there. And but we believe that the NPA level also be in control. So this is another thing basically. And the one major issue also came into the discussion, renewal of credit facilities. So I think this has been raised by one of our key panelists, but I believe that there will be some solution which will come later or sooner, and this problem will also be solved, so that the renewal of credit facilities can be automatic in the mode also. And the additional method of lending, so definitely use of additional method of lending which is already there, and the bed bank and the other areas which we have discussed. So these are the key areas, and I hope that our audience must have get some advantage of it. There will be more learned now. I would like to thank you to all the panelists from core of my heart, that they have taken their own time and their valuable time. They are all senior people. They are a veteran of the industry. So once again, thank you to all of you, and the thank you to the audience also for listening us patiently. And I would like to thank you the Resurgent team for making it successful. So they are hidden heroes, and they have worked hard to bring all of us at one place and making this program successful. I would like to thank you to everybody for joining with us, and wish you all happy and healthy and safe. Thank you.
Thank you.
Thank you.